Hi again, this is Rick with AmazingAccuracy.com. Today is October 21st, 2013, and it's currently 2:33 p.m. Chicago time. Well, I thought I'd revisit the S&P 500 market again, not only as a recap, but also to give you an outlook of what to expect here in the near term for the stock market. Now, if you have been watching my videos on my YouTube channel, you may recall a video called Market Forecasting Secrets S&P 500 Demonstration. If you haven't watched that, I would highly suggest that you do so. I'm going to put a link here up in the upper left there. You should see it. You can click on that and go right to the video and check that out, and then come back to this one, or you can just go ahead and watch this one, then go and watch that. But I would recommend watching both these videos. As a recap, in that previous video of the S&P 500, what I did was I used one of the secrets found in my book, Market Forecasting Secrets. It was secret number 12 that was applied to the stock market, historical data, and it extrapolated that we should see a significant bottom in the S&P market around the October 8th time period, which you can see right here on this daily chart of the S&P 500 is right where my cursor is. And if you'll notice, the very next day, October 9th, became a significant bottom in the S&P 500, and then prices not only made one of the biggest range moves the very next day, which we haven't seen in the last 2 months, but it has continued to climb ever since then. So from that bottom of around 1640, it is currently made a high today of 1742. So that is a good 100 point range so far in the S&P 500 from just that one secret number 12 of my book. So it's definitely a valuable investment. Those who have the book know what I'm talking about. The testimonials on my website pretty much make that clear. Anyway, what I want to bring your attention to is this is the monthly chart of the S&P 500. And right here we're looking at the price bar for October, which is this month. And today again is October 21st. And so there's about 10 more days of this month to go to see whether the high and low of this bar remains where it is or if it continues to move higher. So far this bar is not fully completed because each one of these price bars represents a complete month, and this one here is October, and so far we're only 21 days in the month. So it may not be done yet as far as its range. But for right now, the high is at 1742 as of 2:36 p.m. Chicago time today, which just happens to be resistance based on time price squaring. You can see the squares are applied on this chart based on 90 degrees coming off of a month of October of 2011. So that was exactly 2 years ago, October right there where I've got my mouse. And so it's a 2-year move. Here's October of this year, and we can see that it has gone 1, 2, 3, 4. That's one circle worth of 360 degrees, and then another 270 degrees above that, because each one of these horizontal lines represents, as you can see here, 90-degree move. That's a 90-degree move up. That there's 180, 270, 360 would be right there. And you can see how price has reacted in the past. For example, you can see here in March of 2012 that it made that significant top at the center of the square here at resistance, pulled back. You can see that it then made support June 2012 right here at 180 degree support line. It then went up end of square to September 2012, where it again then pulled back to support, as you see right here, November 2012, and then it has moved up here to May of 2013. You can see it has hit resistance here. It has pulled back to June 2013. You can see it hit support here, and then ever since it has moved up and is now at resistance here and support for the one bar so far is right in the square. But this month is not done yet, so we don't know if they'll go up to the next level, which is right here, around 1762, or if it's going to stay like that for October, and then we can see what November does. Okay, the thing that you want to know too is we are now knocking at the door of overbought territory for this market. And there's also indication on the lower time frame charts that we are currently overextended, which I'll show you in a second. But right now, whether it be October or perhaps November, we are now at a point where we should be looking for a significant top to form in the S&P 500 market, where a correction of some significance, as you can see like these right here, is likely to begin. Okay, let me go to the weekly chart here, and we're going to start noticing some things that are telltale signs that the stock market is kind of overextended and is going to be wanting to make a good pullback. For example, here, this is a weekly chart where every week, every bar represents a complete week of trading, 5 days of trading. You can see that the swings were quite wide weeks ago, and then it has now started to narrow and narrow, and it's even narrower. And I have this upward pennant or flag formation lines drawn here. So you can see currently right now at 1742, the high today is currently at that resistance line. It may or may not hold, who knows. The whole point of the matter is that if you can see the little numbering I've done here, I kind of keep in track of all the cycle turns that are being predicted. I'm looking at number 3 here. We got 1, 2, and then 3. You can see I'm anticipating it to occur within the week ending November 1st, which is next week. This week is week ending October 25th. And here's the overbought area that is shown right here for the weekly price chart, and it's getting very close to that as well, having last come off of oversold territory back here a week ending August 23rd. Anyway, the whole thing is within one weekly bar of week ending 11/1. So starting with this week and extending no further than 1 week past 11/1, which would be 11/8. Look for that weekly top. Like this is a weekly top here. Here's a weekly top. Here's a weekly top. Weekly top looking as early as this week. Next week would be right on the money, because that's where it's being projected. And then, of course, week ending 11 would be 11/8 would be extended late 1 bar. But we are now in that time zone where we want to start looking for that weekly top, cycle top to form, because we're looking for prices to start pulling back and moving itself back down for about 4 weeks, apparently, from what I've got here, my notes, around the week ending December 6th. So that would be a pretty good 4-week, perhaps 5-week move down once that top is being put in. So we want to keep an eye on that. Now, for those of you that are familiar with the MACD, or even those who are not, let me kind of explain this real quick. What happens often is that when a market is overextended, what you're going to see is divergence on the MACD. And what that basically means is, if you'll notice here, this topping here in the MACD line corresponds with the number 9 weekly top you see here for May 24th. That's week ending May 24, 2013. You can see then prices then pulled back, and then ever since then prices have risen higher up to this week. Yet you'll notice that the MACD line did not pull higher. You can see that that line is lower than here. As a matter of fact, this top moved higher and this top is lower. When prices are making higher tops, but yet the MACD line is not making higher tops, this is called bearish divergence, which means you better start looking for a really significant top to start occurring, because the MACD is not supporting this rise in price. It is saying, hey, this here is on fumes, and so get ready for the floor to drop out in the S&P 500. And so you already know to expect it now within days of today, that we're going to be making a significant top in the stock market. So if you happen to be long in the S&P 500 market, you better start, moving those stop losses, protecting those profits, and being ready to get yourself out of the market, and even perhaps reversing your position to become more bearish in the stock market, because it's coming to that time. Now, the shortest time frame, of course, is the daytime, the daily time frame, as you can see here. And again, here's where it was predicted in advance from the book that I have available, that we forecasted this in advance. We were ready for this move up. We knew it was going to be a bottom, and it has been a sweet bottom. But now we're coming into that overbought zone here on the daily chart, just like it was on the weekly and the monthly. Overall, it is getting to that point now where we want to start looking for that swing top to occur. And once that does occur, we're going to definitely be looking for prices to overall start trending down. So we're nearing the end of this uptrend for now. We want to get ready for that. And right now we're in a time frame today, tomorrow, to make a short-term top pullback. Then it may rally again, but then overall we then want to start moving down. And I made a notation here. Right now it's for October 28th. I wrote number 7 here, but I didn't put anything here where 6 should be, so I can't speak on where that is. I would imagine my notes up here, if I can remember. Let's see, I got to move my camera so you can see it. Okay, you can see I have notes up here. October 31st, ACBD. Now this here happens to be one of the secrets in my book. That is a technique called ACBD, and I noticed that it kind of gives me 1031, and yet I've got this other date of 1028. So that's pretty much in the neighborhood, if anything. But I can't tell you whether 1028 will be the pullback low and then it'll go up to 1031 and drop. All I know is, for right now, we are now moving in overbought territory for the S&P, and it's going to be within days now that we're going to have that top. Anyway, so this is a recap of that market forecast video that I did recently, and also to give you awareness that we are now moving into a time where the stock market is going to make a significant top, and we should be looking for a sell-off. Thanks again for watching my video, and again, if you haven't done so already, please subscribe. And if you like, also I have a free newsletter. You just go to my website at amazingaccuracy.com, and I'll see you in the next video. Thanks for watching.